There are over 90 million photos that get uploaded to Instagram and over 700,000 hours of content published to YouTube on a daily basis, which is absolutely insane. And while the internet and social media have undoubtedly increased communication efficiency, well, they've also contributed to increasing fear of missing out, or FOMO as we like to call it, especially in the worlds of personal finance, business, and investing, where it may very well appear like everyone's crushing it at all times. In fact, the growing trend that I've been noticing online, especially considering the fact that I've been a content creator in the finance space now for 3-4 years, is this idea of being left behind, or just financially behind in general if you're not making hundreds of thousands of dollars per year or have a net worth in the multi-millions of dollars by age 30, which of course for most of the population can be relatively unfeasible, especially in the short term. Now overall, I actually think it's pretty great that people like to share their income online, as it can be a super motivating tool for many, but for others this can also lead to some FOMO and overall just doubt about your own personal finances, right? Hey, should I be focusing on growth stocks, dividend stocks, trading crypto, looking into real estate? All of these can be great tools to create income and grow your wealth over time individually, but also as a global and general investment strategy. The problem is that there's just so much information overload online that this can quickly become extremely confusing and overwhelming. So in today's video, I wanted to speak about this idea of being left behind and worrying about where you're at financially by a certain age. And thank you to Wealthsimple for sponsoring today's video, but more on that later. Okay, so first off, age is just a number. It really is. You can be 8 years old making millions of dollars off of a YouTube channel just as much as you could strike it big for the first time in your 40s, 50s, 60s, heck, maybe even in your 70s. Like seriously, when it comes to personal finances and investing, age is just a number. And the fact that you're even watching this video right now is a clear indicator of the fact that you're looking to better your personal finances. And hey, that's just it. Personal finances should be personal to you, and you should be looking to compete against yourself and yourself only. Now, that being said, I did make a video a couple of weeks back speaking about how the middle class really in North America has been shrinking over the past couple of decades. And this is even harder of a reality for millennials, where it's more difficult than ever really to even break out of that mold and get into the middle class at all. This is mainly due to the fact that the cost of living has just increased so dramatically over the past couple of decades, while the average wages have not followed suit, meaning a lot less disposable income used to invest with. So that had me thinking, like, how does net worth actually stack up in today's current market environment across various different generations and age brackets? Because you hop online and it seems like everyone's traveling the world and just living the life. So yeah, let's talk about net worth, which is essentially the difference between your total assets versus your total liabilities, and you're left with your net worth, which can be somewhat of a touchy subject, but let's remember that net worth is not necessarily a fixed number. This is a value that can fluctuate over time, both positively and negatively. Now, calculating your exact net worth can kind of be a gray area, because some people like to include everything from the value of their house and their investments down to the value of their golf clubs and their TVs, etc. But what's certain about net worth is that typically there's a positive correlation with age. As the older you get, typically the longer you've had to invest and also take advantage of dollar cost averaging through recessions, while also having your house or any other property increase in value over decades. So let's actually take a look at median net worth values by age category here in Canada first, where as we can see, under 35 years old, median net worth is just below $50,000, which for many might be actually quite eye-opening. As we get older, right, progress up to the 35 to 44, there's a pretty big jump here up to 235,000, followed with 521 for people between 45 and 54 years old, and then it caps out at around just under 700,000 for people between 55 and 64 years old. So yeah, as we can see from this data, well, the largest net worth increase is actually between that 35 and 45 year range, jumping by, what is it, right around $185,000, which makes total sense. Usually by this age, you've been in your career for at least a decade, so you have a lot more expertise. Typically your income is quite a bit higher, and you've also had at a minimum 1 full decade of investing, taking advantage of compound interest, which really comes into effect after around 10 years. And also, hopefully, usually in this age, you've been able to acquire a principal residence and a couple other rental properties, which is one of the largest factors contributing to net worth increases, especially over the past decade or so, as property prices have just skyrocketed so much. By the way, you might be wondering why in the previous example we were looking at median values rather than averages, which typically are quite a bit more common. But it's quite simple. If you think of it, well, when taking averages, the richest individuals per age categories would significantly skew total values that are a better representation representation for the average person across the country. All that to say though, for me at least, this was pretty eye-opening, seeing that the median net worth per age bracket is not necessarily nearly as high as most people may have come to expect, especially considering the fact that most people's net worth are tied up in illiquid assets, so things such as the equity in their homes or other properties, as well as retirement accounts such as RRSPs. There's really no concept of being financially behind because everyone's playing life and their finances at their own pace. And always remember that personal finance is personal to you. So comparing yourself to what others are doing is completely irrelevant. Now, as a sort of side note here, I just wanted to highlight a pretty crazy and interesting piece of data, being that the median net worth of renters nearing retirement is actually significantly lower than that of homeowners, with homeowners reporting a median net worth of $685,000 compared to renters at around $24,000. And as mentioned in previous videos, again, this makes complete sense because for individuals with a net worth under around $1 million, home equity represents more than 50% of total net worth. So if you're watching this video right now and you're not yet in a position where you're able to make that first move towards purchasing a property, well, take a second to think about what you can do towards increasing your income this year and the next years to follow, as well as how you can continue investing towards that down payment to make that first purchase if this is even something that you're after in the first place. And I actually have a couple of videos on the channel speaking about some different side hustles, including this video that you can check out right here. And quickly here, what about net worth values down in the United States? So in this case, unlike for the Canadian values, we do have both the median, but then also the average net worth. And it's going to be made pretty clear here as to why the median is a much better representation of the average person in the country. So at less than 35, median net worth $13,900 versus average net worth at just above $76,000. Now moving on, 35 to 44, median net worth of $91,000 versus average net worth of $436,000. And this trend and discrepancy between the median and the average continues all the way up to the maxed out values at 65 to 74 years old, where the median net worth, again, $266,000 versus average $1.2 million. So this right here is the reason why looking at the median net worth is again a much better indication of what the typical person in this case the United States is going to have for a net worth, because that's the value directly in the middle versus the average net worth. The richest individuals are going to highly skew up the entire average. So looking at the data, while it can be somewhat normal to feel potentially financially behind in today's society with social media painting a picture of everyone's life going great, well, taking a look at the data can be quite a bit more humbling. What's certain though is that you want to make sure that you're investing your money in a way that actually makes sense for your own investor goals and risk tolerance, and whatever those might end up being. Getting started is made super easy with today's video sponsor, Wealthsimple Trade. Wealthsimple Trade is Canada's low-cost investment brokerage that allows you to buy and sell Canadian positions completely free, and they've also recently launched a Plus subscription that allows investors to hold US dollars. What's really great about Wealthsimple Trade is that it takes as little as 5 minutes to create an account, and you can start investing with as little as $1. In fact, they also offer hundreds of stocks available for fractional trading, meaning that you can invest in companies whose stock might trade for very large amounts without having to shell out thousands of dollars to buy a single share. So if you're ready to start investing into your own financial future, make sure to check out Wealthsimple Trade today using the top link down below in the description, where you'll get 3 free stock rewards, each with a value of up to $4,500 a piece when you sign up, once again using that link down below in the description. Alright, so hopefully the data on median and average net worth levels that we just looked over for both Canada and the United States gave you a little bit more perspective on your own personal finances and financial journey over time, which again is personal to you and you only, and it's going to be up to you to decide how you're going to work on improving it. But since you're watching today's video, you're probably wondering what are some concrete steps that I took myself and have also observed as being successful steps towards one day achieving financial independence. One of the most important things I learned early on in my journey towards financial independence is focusing on big wins as well as the big picture rather than the small and mundane. Contrary to what you might think, no one gets wealthy clipping coupons and trying to save a buck. It just doesn't happen, and actually tends to keep you in a poor mindset overall. So you're much better off strategizing and targeting larger financial wins in your life. For example, sure, I probably could have saved a couple $1,000s over the course of this past year by avoiding restaurants, trips, and any other type of activities and expenses. But in the big picture, does any of this really matter when you're focused on dramatically increasing your income through business and investing? Okay, so that might sound pretty generic, even though it's the truth, but you might be wondering, what are some of these big wins then? Number one, and most importantly, if you're currently an employee, focusing on getting a raise and just overall increasing your income. Number two, creating a viable side hustle or business that has the capacity capacity to actually scale, unlike your own time, which cannot scale more than 8 to 10 hours per day. 3, getting out of your comfort zone and networking to increase your opportunities. 4, contributing to investment accounts consistently and actually working on a tax strategy with your CPA. Number 5, buying real estate regardless of the market and holding it long term. This is hands down one of the most fundamental ways that everyday people can become multimillionaires. 6, expand your knowledge and financial literacy. This cannot be understated. How could you ever expect to better your financial position if you don't know how to invest, what assets are, and so forth? And in fact, if you're interested in learning more about how you can actually build a stock market portfolio that does make sense for your own financial needs and risk tolerance, check out the full stock market investing course that I decided to throw up on Skillshare. You can check it out completely for free on a 1-month trial. Now, above everything else though, the most important big win that you can focus on is starting to invest early. Again, this cannot be understated because the power of just investing even $100 a week into a registered investment account is monumental over the next 20-30 years of compounded growth. And that's even if you just invested into one of the most boring passive ETFs that you can think of, like a total US stock market ETF that's returned investors an average 8.1% since 2001. So let's say you started doing that, investing $100 a week into a total US stock market fund at age 25 with $0. Well, by age 35, you'd be looking at a net worth in the waters of around $75,000 without doing anything else in your financial life to try and increase it, which is still quite a bit higher also than even the median value of under 35 at this point that we looked at earlier. And further compounded over another, say, 10 to 20 years, you're looking at much larger values. So the point is, humans have a very, very hard time conceptualizing, saving, and investing towards the future, and also understanding the power of small recurring actions towards your financial goals. So overall, if you're feeling financially behind for whatever reason, first ask yourself why you might be feeling this and what is contributing to this mindset in the first place. If it's because of FOMO and looking at what others are doing, well, that's fine, but take a step back and try to identify what are some concrete steps that you can actually take in your own life. Thanks again to Wealthsimple for sponsoring today's video. If you want to get up to 3 stock rewards, check out the link down below in the description. And also don't forget to check out the full stock market investing course that I threw up on Skillshare completely for free. There's also a link down below in the description for that. So really hope you enjoyed today's video. If you did, make sure to drop a like, subscribe to the channel, hit the bell button. And with that said, I will see you in the next one.